I want to quickly talk to you about the perpetual inventory. So, how a perpetual inventory system works, how do you actually use it to optimize your inventory management this year? So, one thing for sure, when you think about perpetual inventory, I want you to think about accessibility. I want you to think about affordability, but I want you to think also about efficiency. So, let me first define for you what is the perpetual inventory model. So, perpetual inventory is a system of inventory which allows you to keep track of stock in real time. Real time, that's really important. Okay. And perpetual inventory helps prevent stockouts, detect theft and shrinkage immediately, and increase cash flow. So, a perpetual inventory system continuously updates inventory levels as you buy and sell goods. It actually saves all product data into a single system, both for online and physical retail stores, making it very easy when you think about it for you to keep sufficient stock on hand. And the cool thing is, you never run out of inventory because the system constantly reorders products as counts diminish. So, since this inventory accounting method tracks stock changes in real time, you can really identify when items are, for example, running low, and you can immediately restock them. Okay, so that's important. So, the perpetual inventory method also does something else, and that's really important from an accounting point of view. It helps uncover your customers' buying habits. So you have a clear idea of what's working and what's not working. And it has an impact on accounting because you have an ability to trigger revenue, to trigger sales. So because inventory is updated regularly, you can discover if demand surges during certain times of the day and how the weather impacts demand for a specific item. And the internet has made a perpetual inventory systems easy to manage. So using barcodes, radio frequency identification scanners, RFID scanners, and point of sale, you can actually support this system by quickly updating inventory information as goods are sold. So problems like broken inventory and missing stock are mitigated because all discrepancies are tracked and recorded through the system in real time. Remember, it's actually happening in real time. And so, accurate data on available stock is actually the biggest benefit of using perpetual inventory, especially because you are able to get things done in simultaneous manner. Fantastic. So let me talk to you about perpetual versus periodic inventory methods. Because when you think about perpetual inventory, you have to contrast that with periodic inventory. So perpetual inventory is often compared with periodic inventory to show which is more effective and gets a better return. And as said a little earlier, perpetual inventory offers real-time tracking and reordering of inventory. So in a periodic inventory system, you record stock levels at the end of an accounting period, and this can be monthly, quarterly, or yearly. Okay, so that's the kind of interval you want to look at. Under a perpetual system, two journal entries are recorded when a product is sold. Number one, the sale amount is debited to accounts receivable or cash and is credited to sales. Sales is a revenue account. So to credit it, to increase it, you credit it. Accounts receivable is an asset account. So to increase it, you have to debit it. So that's the first journal entry. The second entry, the cost of merchandise sold, is debited to the cost of goods sold account and credited to inventory. When you credit inventory, inventory being an asset account, when you credit it, you are actually reducing it. So under the periodic system, the second entry is not made. Second entry, the cost of merchandise sold is debited to the cost of goods sold account and credited to inventory. So this method, the periodic system, this method takes inventory at the beginning of a period, adds new inventory purchases, including raw materials, work in process, and finished goods during the period, and actually subtracts ending inventory to find the cost of goods sold. This means a company cannot know its full stock levels or cost of goods sold until a physical inventory count is finished. So that's really what it is. Now, the benefits of using a physical inventory reporting method like periodic inventory are that you have a simple setup. You have a low cost model, and the process is very easy for small businesses. But there are some disadvantages too. There are some drawbacks. You have less control over inventory, delayed results, labor intensive, and you have time consuming. So that's one of those things you have to really account for as you think about perpetual versus periodic inventory methods. So let me talk to you about perpetual inventory accounting. How does it work? So I want to share with you a few things to have so you have a clear idea, okay, of what's really happening here. So I want to talk to you about perpetual inventory formulas. POS updates inventory. The cost of goods sold is updated, or reorder points are adjusted. The purchase orders are created, and received inventory is scanned and added to a database. I'm just walking you through the methods, the methodology you need to follow when you think about perpetual inventory accounting. So let's first talk about perpetual inventory formulas. So basically, you have but for this to happen though, you have to really have a clear idea that you have economic order quantity, cost of goods sold, finished goods, FIFO, LIFO, and weighted average cost. So what is the economic order quantity? That's the number of units you should add to inventory with each order. The goal here is to help minimize the total cost of inventory, like stockouts and warehouse space. So the EOQ formula for is the square root of 2 demand rate times setup cost divided by holding cost. I'm going to put this on the screen. So, and here Q is you are speaking about the number of EOQ units. D is the annual demand for products. Okay, we have the setup cost, or how much one order costs per purchase, and also the holding cost. You also have the cost of goods sold. Cost of goods sold is the direct cost of producing or buying products. It includes the cost of labor and materials related to production or manufacturing, but not distribution or sales cost. So in a perpetual system, cost of goods sold is recalculated for after each transaction. So the cost of goods sold equal BI plus P minus EI. Again, I'm going to put this on the screen. So BI is the beginning inventory. P is the purchases that were made during the period. And EI is the ending inventory. Then you also have a finished goods. So finished goods are all the products that you can actually sell to. You can actually sell to customers, okay? And to calculate your finished goods on hand, subtract your cost of goods manufactured from your cost of goods sold. And then you also have a FIFO, LIFO, and weighted average cost, which are inventory accounting methods that I've actually covered on another show. Next, you have the POS that updates the inventory. So when you sell a product, what happens here is that your inventory management system immediately debits demand inventory across your sales channels. RFID and barcode scanners make this very easy. You don't have to do this manually at all. I mean, back in the days, yes, you had to really have Excel spreadsheets and actually do things manually. But nowadays, no, you can really things are happening automatically in the background. Okay, so and then next thing that happens here is that the cost of goods sold is updated. So whenever you sell or receive a product, cost of goods sold is recalculated. Now remember that cost of goods sold is actually an item that affects multiple financial statements. You're looking at the balance sheet. You're looking at the balance sheet through the inventory aspect of things. You are looking at the income statement because cost of goods sold is an expense item. And then you also have the statement of cash flow because as you're buying and selling products, you are actually triggering cash flow transactions. Next, you have the reorder points that are adjusted. So what happens here is that your perpetual inventory system automatically updates reorder points based on historical data, keeping a continuous optimal inventory count. And this inventory count is going to help you actually maintain a certain level of clarity, a certain level of, let's say, transparency in your inventory process. One thing I need to add here is that as you go through a perpetual inventory, Remember that the goal here is for you to comply with U.S. GAAP. U.S. GAAP, United States generally accepted accounting principles. So perpetual inventory helps you have the proper evaluation, or let's say the proper value for the inventory, for your inventory. So your stock, whether you have stock in your warehouse or in another facility, it must actually reflect what you have on your balance sheet. Next, you have a purchase orders are created. So it's one of those things where when you think about perpetual inventory, you got to really sort of trigger the PO process at some point. PO purchase orders. So purchase orders are created. So when an SKU number reaches its reorder point, the system creates a new purchase order and automatically sends it to your supplier. So what happens here is that again, I want to insist on the fact that everything is done automatically. You don't have to do it manually anymore. Okay. If you have the proper system in place, those things should be taking care of themselves automatically. Okay. So purchase orders are created, and next the received inventory is scanned and added to a database. So after inventory is sent to the warehouse, basically it's scanned because that inventory has to be properly accounted for, right? So it is scanned using a warehouse management software. Sometimes it can be a POS also, if you have the proper POS, because some POS systems can be all-in-one systems. They can serve as a WMS. They can serve as a IMS, inventory management software. They can also be a POS. Okay. So basically, all items will appear in your inventory and will be available for purchase throughout all your sales channels after the items are scanned using warehouse management software. So, so that's really important. So automation is critical for a successful perpetual inventory system. So the good thing is that because the system updates second by second, there are heaps of real time data involved. So it's important that the system you build integrates well with your existing infrastructure, right? After all, the point of implementing perpetual inventory is to save time and money, right? You want to make sure that you have proper integration to your current tech stack anyway. And so you want to invest in a system that integrates with all your sales channels, retail locations, and your warehouse management system in order to maximize your inventory system's benefits. And you want to do this in a very scalable manner. So when you think about perpetual inventory, what are the pros and cons here? Let's have a quick conversation about it so we are pretty clear how to really strike the right balance when it comes to a perpetual inventory. I want to first talk to you about the pluses, and then I'll speak about the minuses. So let me talk to you about the pros. So you have like perpetual inventory saves time, especially during peak or seasonal periods. Let's say a year end during the holiday period, Thanksgiving. You have like Black Friday and so on and so forth. Inventory is updated in real time, so that's really good because it has a positive effect on your balance sheet. You have reduced physical inventory counts. You have better forecasting, better demand forecasting. So you know the trends that you need to care about when you analyze your revenue. You stay on top of all product sales. That's really important, especially if you have a variety of products that you sell to a variety of customers across various geographies. You are able to like predictive data helps you identify trends and shifts. Predictive data is really quite essential when it comes to perpetual inventory because it gives you the kind of intel you need into your inventory to optimize your sales processes. And perpetual inventory also makes financial statement planning easier. And I'm talking here about cash flow statements, balance sheets, income statements, but also statement of owner's equity. And you have a process that also saves labor costs, prevents stockouts. That's really important. And also gives a more accurate view of customer preferences. And also centralizes the inventory management system for multiple locations. So you have a clear idea of what works and what doesn't work. And also, perpetual inventory provides greater accuracy because every item is recorded in a separate ledger. Makes it easier also to identify theft and leakage. So that's important. So that's a non-exhaustive list of all the pros of perpetual inventory. What about the cons? What are some of the minuses you need to expect when you think about perpetual inventory this year? Perpetual inventory requires complex systems. You may have, in some cases, a higher startup cost, so that could be a little problematic. But hey, listen, it is what it is. The system requires more consistent record keeping, and basically, the whole thing could be subject to errors due to overstatement. So this is called the phantom inventory process. Okay, and it can also be misled by stolen inventory or, in some cases, human error. So, who should really use a perpetual inventory system? The thing is that nearly everybody. I mean, nearly everybody. The thing is, you have a lot of retailers in the U.S. and Canada losing billions of dollars due to stockouts, and in some verticals, shoppers experience stockouts as frequently as every third shopping trip. So it's clear that stockouts are on the rise, and a perpetual inventory system can help. But is it the right system for you? So businesses that tend to excel using a perpetual inventory system include businesses with high sales volume and multiple retail locations, fast growing businesses with lots of SKUs, for instance, small to medium retailers that want to scale, and dropshipping businesses with lots of moving inventory. So that's an important element to think about. Now, one thing for sure, a perpetual inventory system doesn't work for all types of products, and the best way to determine if this system could work for your business is to actually look at three factors. I want you to look at offering, I want you to look at demand, and I want you to look at inventory size. So when I think about offering, some products are, let's say, unitized, have small parts, or consist of multiple separate items. This is particularly true if your business makes products instead of having a finished goods inventory. It can really create more work and take more time to onboard or configure new products that consist of multiple units. You also have demand. So, really, the thing is that for a single store with relatively few products, it is probably not necessary and is a matter of personal preference. However, in large stores with more products, having an up to date product data and availability allows you to manage cash flow more efficiently and discover seasonal trends within your range. You also have inventory size. So, stores with a large range of products should actually use a perpetual inventory system because it's automatic and track every purchase and sale. If your business has a lower volume inventory process, you may excel with periodic counts. So you got to really see what really works for you. Okay. So as you can see, a perpetual inventory system can reduce stockouts and increase cash flow. The best part is that it doesn't have to be complicated. With the right tools and processes in place, you can set up an inventory control system that automatically replenishes stock and lowers the cost of inventory management with no human intervention or reordering errors. Okay, and using a point of sale system can also help you implement a perpetual inventory system and start seeing the benefits today. So that's really important. So, in conclusion, in today's conversation, I spoke to you about perpetual inventory, and I gave you the pros and cons, the extras, but also how perpetual inventory accounting really works, the step by step. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.